watching. Where we might have got a little wrong, though, was, of course, what was going on with semiconductors. We saw one, we saw two, we saw so many different semiconductor trades, and it must have been purchasing inside of this big turnaround, because what happened? It exploded out. So huge transactions in semis, and then all of a sudden a big explosion. Of course, we didn't know whether they were buys or sells. We were speculating at that time. Another one was treasuries, and treasuries showed that we've had some big transactions. Then we got what we call an island reversal, which we'll look at later on. So could that be a sell? I kind of guess it will be, based on the price action at this stage. And we'll look at that in very, very soon detail, because of course treasuries is something that a lot of us are following right now, especially into 24. Customers' net delta exposure. What is going on this week into OPEX? Well, we know there are a few factors. Number one, theoretically, max pain is a lot lower than the current market. Now, max pain is the idea that markets, if they were to make the most amount of money possible from all options that are kind of outstanding, they would push the market towards a certain area. Now, that's much lower than where it is right now, but actually there are a huge amount of 4,100 in the money calls, and there are also a couple of points that we need to discuss. 4,700 is a bit of a magnet, 4,400 is a bit of a magnet, and 4,500 is an interesting middle zone level. So these are the kind of the three levels that options are kind of dictating to us by the end of the week. And you can see here that the net exposure is pretty negative in terms of net delta. So that's an interesting one as well. It would suggest that bears might be coming in, but that's only one part of the options framework. So let's talk rotation now. And it was a day of semiconductors, but this chart probably doesn't really even tell us exactly what was occurring. We saw some rare things. We had semiconductors up, with staples being one of the biggest moves as well. And then we had industrials, and then of course we had bio as well. So it was a very strange session across the board. We also have gone to the next 5 days now of semis being the best, consumer discretionary coming through, and gold now being the worst, which were the strongest only a few weeks ago, yields. So let's get into the charts together, and we'll start off here with effective yield rates. So we can see here effective yield down. That's good for the markets. Let's face it. That's a good thing. The markets like it. They're going up. RSP, equal weight market, doing really well. It's still underperforming the S&P 500, so it's still got room to go up, because of course the S&P 500 is well in front of the RSP at this stage. So theoretically, there's more room to grow here in rotation. What's going on with bonds? They've been pretty strong recently in terms of seeing them go from strength to strength to strength in terms of overall risk. And you can see here that the US 2-year versus 10-year is still not underneath 1%, showing us that really we don't have to be super concerned about markets or pullbacks at this stage. And we've talked about that a few times. Consumer discretionary versus staples, that's been holding its own. And we know that if it is rallying, that is usually a good sign for the market. You can see here December, it started rallying last year, and it's been pretty much rallying all year. Even with the pullbacks, it's been quite strong. So that's showing that the markets are still relatively good. What about US 10-year? Now, this is one I'm watching. Notice the 4.3 stopped it in its tracks. If we get out and above this area, I could kind of expect that to start to really see a bit of risk off. So yields will be worthwhile watching. This is a very important demand zone for yields, and it's a very important demand zone for oil at the moment as well. So if we do see yields pop out through 4.3, it could be one of the catalysts that breaks this current bull run. It's something I put in our week's newsletter, and I also talked about this trend line being broken up, because of course this was a fairly substantial downward trend line that on the small time frames and around the right zone that's performed on the higher time frames, we saw some buyers come back in for yields. That happened off non-farm. So remember, it's going to be these catalysts: inflation, the Fed, the FOMC, obviously big Jerome coming out and annoying everybody. And then we get the same kind of thing coming in here from treasuries, an island reversal happening in supply after seeing large transactions. So that's kind of like putting some things together. A great one run for treasuries. Look, treasuries are usually not an investment. They're an investment vehicle. They're not usually a trade vehicle. And they've been a pretty good trade recently, which is the first time in a while. But you can see here that we do have an island reversal. These are the signs that weakness could be coming. Let's talk put-call ratio. Still not much to go off down there. Obviously, we are seeing calls coming through a little bit more, though, which is a good sign, especially if you're trying to get a pullback coming in soon. And home builders are continuing to go up. So that's a positive sign for markets, along with Dow Jones Transportation Average. What about the squiggly lines of the central bankers? What are these central bankers doing? They're sneaky. We know that. Well, it turns out they're still sideways. So really, we're not seeing injections and we're not seeing any kind of removal of the tools. So markets could still rally off that. There's no real worries there. Copper did weaken off the area that we were talking about, that 385 for the scalper or day trader. This was an interesting short, and it did end up engulfing backwards. So that kind of tells you that there could be further weakness on copper's leg. I would like to see copper go up a little bit more, but look, when you're looking at the charts at the moment on these medium-term timeframes, these kind of 2-hour daily, they're not looking too great. I'll be getting way more bullish on copper again at 3.95 plus, which at this stage we haven't hit. So, of course, I have been pretty bullish on copper recently. Some nice moving copper stocks, but a little bit of cause concern there the last 24 hours. Let's move over to the US dollar, another one that we're watching this week. 104.50, worthwhile and alert. We know that we've got supply here. We know this is resistance zone. So, of course, this is an area that we will be focused on to see what happens next. For now, dollar is being contained. We've talked about gold. I was, of course, incredibly bullish on gold until we saw this. And this is going to become a very important chart to look at, because does that remind you of anything? Pause the video here and let's see if you can guess which chart or what this reminds you of that just happened really recently. But for now, gold continues to slide, and it may slide all the way back down to even the 1920s or 1950 kind of areas. So I'm not really that bullish on gold for now. We've already demonstrated many times why the stats point to sideways to down for about the next month. We'll create structure. I'm sure there'll be some kind of trade, but we haven't seen it yet. US oil, big level. So, of course, this level between 67.50 and 69.50 is where we should see buyers. And a lot of it's due to the fact that it was oversold. CTAs came in and smashed this down along with everybody else. We know retail was heavily buying oil the whole way down, getting absolutely smoked. We've hit critical zones. We've seen some structure build up. Now, that's consistent with also seeing yields go up. So these are the undercurrent signs of potential weakness coming. Let's have a look here at what we see on the small time frames, and oil actually held its own pretty well. It fell off, but of course it did make some recovery. We've got the most traded zone, which could be where the bears re-enter into the oil trades. 73.63 coming up. We also have a nice base formation on small time frames, which we talked about last week. And so far, so good on the bull move for oil. So certainly a nice little pickup there considering what it's been doing. Tesla continues to be really weak as it coils within a very tight range. We've discussed this, and this is a chart to watch this week, because really when Tesla coils for a while and breaks out, it can have a pretty explosive move. So coiling is a burn in time. When you get a movement, it often is quite fierce. So Tesla focus 232, 230, and of course this high here, which is, I think it's about 253. Yeah, 253-ish. If we get a breakout either way, break the downward trend line, or of course break this bottom end of the coil, I think it's going to be fairly significant, and we'll be watching. Semiconductors were the big one though. I mean, it's a breakout. What can you do? That is what it is. Could it be false? It's possible, but for semiconductor traders out there, you're going to be pretty happy. I never go against semis, generally speaking, because semiconductors are very, very good. It's like the best sector in the US. It has been for years and years and years. And, you did see some big trades here, but overall, it's just continuously driving higher. You could claim this is a flag now. And of course, if you want to take a poll, you'd be getting a very big number for semis. So that could be something that people are looking at in the future. And let's just quickly work out where that would be going. So let's get the poll length and let's actually work this out. That would be predicting, all the way up into the 190s. So bulls would be like, wow, that'd be amazing. It's possible. Anything's possible with semis. But yeah, at this stage, I'm cautious still on them, even after such a big run. German DAX, let's go here. That is a massive squeeze, and it continues to be a squeeze. I wouldn't go against the DAX, not until we see signs of it. And this is another, word of caution. It just keeps squeezing higher. Remember, predicting that it's going to go down is very difficult. And I've said this many times. Being a bear is hard. And if you're going to be a bear on markets like this one, you're really going to have a lot of commitment and usually have to select the right instrument, maybe a fixed risk option or something like that. Because if you got into a short squeeze here, unfortunately, we already know, remember, 90% of retail traders trading futures contract instruments were actually short this thing. And that's not good. Retail traders short, look what's happened to them. So that was a big deal. US 2000 still coiling, maybe poised for a breakout. You can see here it's kind of trying to move to the upside. Some interesting stuff here, coil in time. And we do know that at the moment, the US 2000 has been relatively strong. This big rejection week, the shooting star, is a key level as well. So I've marked out 1892, and if it does break out, I kind of expect it to around 1920. Q's in focus, new high, set the alert, and we got it. Now, what does that mean? Well, it wasn't led by the Mag 7, which seems almost baffling when you think about it. But, I think that we've got some watch reaction levels, 16,300. So we might drive into that now, which would be in line with an S&P 500 level we'll look at in a moment. But it's out and it's trying to move higher. So there could be a little bit more juice in this one. I think also the Mag 7, even though this is not necessarily the best weighted market for it, you can see here, because it's weighting a little bit heavy on the NVIDIA side, this chart, you can see that it still looks really weak. It's come up, it's rejected this area. There's, of course, your potential distribution. There's your role reversal, and maybe we're going to see a weakness. Again, I might mark out actually underneath this low of the previous session. And if we do end up getting that, could be a real deal. So yeah, Mag 7, certainly much weaker than the rest of the market, telling you that rotation is still underway. Pretty much everything we've been talking about. S&P 500 is 4622. One of the levels I'll be watching this week pretty heavily is going to be on the S&P, a 4637, 4640. So I've said watch reaction here. My expectations are that inflation or one of the other bits of news could pump us higher. Then we may see a rejection week. Now, if we do end up getting that, I think we'll know a lot more about what the market's telling us next. But at this point, it keeps grinding higher. There's not much we can do about that. The only market that's given us a bear signal was the NASDAQ, which on the small time frames gave us a short that really should have been broken even, which of course was in here, which was 16,000. And we got a couple of shorts off that, you can see. Then NFP pushed it through. So that's why we're getting that kind of bigger movement up. So S&P 500, some levels to watch. We've got 4640, 4637. And then, of course, for the bears, really the main kind of swing bears, you're going to be actually needing it well underneath here if you're going to go for it. So it still continues to melt up. But the reason I want to say melt up is because we just saw Bitcoin get crashed. And yeah, it's not unusual for Bitcoin to have these types of massive crash periods, but this is a very worrying sign. This has been a melting up market for a while. It's been dull. It's been bullish. We've been very bullish on it, of course. I've been aiming for that 46 to 48 kind of level. We've obviously not quite tapped that zone at this stage, but we did see something pretty weak. We saw a sell-off from the top to the low of around 10%. Now, it's not hitting my normal crypto kind of verse, which is usually a 15% sell-off, so it's not quite there yet, but that's still a flash crash. And you tell it's a flash crash because it just instantly loses liquidity. If you're not prepared for these types of things in crypto, then you haven't traded them before, you don't know what you're getting into. And here we do have what I would consider a bit of a change of trend. Now, interestingly, it ended up, I was hoping it would rally a little bit more to allow people to short that 43.5 by the time of this video, and then we talk about that. But what it ended up doing was it made a new low, and then now it's trying to rally up. So some interesting levels. It's still possible for this thing to actually make a new high, get to 46.48, but I would say that this is the sign of it slowing down and more than likely, even if it makes a new high, really suffering a little bit now moving forward. So everyone that's got on board is pretty much on board. I think that the bullish hysteria on this one is probably kind of crescendoed, and the highs, which we were already expecting at 46 to 48, if they do come, especially after this, I'd be pretty worried about that. So yeah, I don't really like this market from a buy the dip perspective after such a big sell-off. What do you think in the comments down below? One notable thing is the 20 moving average continues to hold. So you can see here 1, 2, 3. So it's hard to bet against that as well, because this is many times it's found it and bulled up. So even though that's definitely a warning sign, and it's certainly a change of trend on the smaller time frames that enables now shorters to come back in and push some of those levels like 43.5 and stuff, there are some serious question marks over this market at this stage. So I think crypto is one to watch. Let's talk about options for the week ahead. Of course, it's OPEX. We know that technically Max Payne's sitting at 441.